What are these Chinese liquidation plays or Chinese pumps or pump and dumps, whatever, however people want to describe them?
So it's kind of changed a lot over the years. We've seen for 10 years plus Chinese companies list on US exchanges and be heavily promoted or mislead investors about the state of their business. And then they say, with 100% of your funds, we got this great near-term, short-term trade. You really got to go in, and they're really going to be pressuring you to buy more and more. They're going to be asking you for daily confirmations of your holdings every day to make sure you don't sell. And the end game is they own a lot of stock, the scammers. They dump it on retail investors, and then out of the blue, we see these stocks collapse 90% in a day.
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground. Tonight, another superb episode, a superb conversation coming at you. Tonight, I'm being joined by Edwin Dorsey, aka The Bear Cave, founder of the Bear Cave newsletter. Over the years, Edwin has built a reputation for exposing frauds and pump and dump schemes that have drained billions from retail investors each year. We'll dive into how he spots red flags, lessons from past trades like PTHL, FLYE, and RAY, and why shining a light on bad actors can protect everyday traders. This is an episode you don't want to miss. Now let's get stuck in. Please welcome to the show. I'm so excited to introduce Edwin Dorsey, aka The Bear Cave. Edwin, how you doing?
I'm excellent. Thanks so much for having me on the Investors Underground podcast. I'm really excited to be here.
Oh, we're so keen to have you on, and thank you so much. And it's such a cool name, by the way, The Bear Cave. I love it. Absolutely love it. Now, we've got tons we want to get through tonight. And I'm mainly going to be talking about particularly the Chinese scams on listed US, obviously, exchanges. In Investors Underground, we typically refer to them as like China liquidation plays, because ultimately that's what they end up doing. They end up liquidating, and then we get those 90% pullbacks, but it's just complete waterfalls. Before we get into that, before we get on to who the Bear Cave is as well, I'm interested to know, who's Edwin?
Yeah, absolutely. So I've been passionate about stocks from a really young age. Like second grade, I had the stock market bug. My transition to the short side didn't happen till later. Really, my freshman year of college, I got introduced to two of the best short sellers out there. One is Jim Carruthers, who ran $1 billion short-only fund called Sophos, and another is Mark Cahotas, who's this fiercely independent kind of activist short seller. And I interned at Sophos on and off all 4 years of college. That's how I learned the ropes. I met a lot of activist short sellers. I learned how to do the deep diligence there. And my senior year of college, I wanted to work for that hedge fund, but they were in the process of shutting down. So I needed to get a job. And I started the Bear Cave newsletter as a way to get attention from all the hedge funds and hopefully get a job. And then the pandemic happened. The Bear Cave kind of took off in the pandemic. That was the best time ever to be writing an email newsletter. And for the 5 years since, my full-time income has been reader subscriptions to the Bear Cave. I do weekly recaps of what goes on in the short world, suspicious resignations, interesting tweets. And twice a month, I do these deep dives into companies that I feel are misleading investors, harming customers, are on the wrong end of disruption. And increasingly, these China liquidation plays, I try to time and predict.
I was going to say, that seems to be very much, a strong focus of yours now. So, and perhaps just as we move on into this discussion, what are they? What are these Chinese liquidation plays or Chinese pumps or pump and dumps, whatever, however people want to describe them?
So it's kind of changed a lot over the years. We've seen for 10 years plus Chinese companies list on US exchanges and be heavily promoted or mislead investors about the state of their business. Today, overwhelmingly, what's going on is you just have a ticker listed on NASDAQ. The actual business is irrelevant. And these scammers have huge operations through Instagram and Facebook to run ads, to recruit average ordinary Americans into WhatsApp groups, and essentially in a month-long process, trick them into buying a lot of stock in these close to worthless US listed Chinese companies at inflated prices. And the end game is they own a lot of stock, the scammers, they dump it on retail investors. And then out of the blue, we see these stocks collapse 90% in a day. So we see this over and over again, once a day, twice a day. And I estimate in aggregate that these scams are transferring $10 billion plus a year from ordinary US investors to overseas stock scammers.
That's frightening, number one. And like at its roots, I mean, it's 10 billion, that's an absurd amount of money. And I mean, why? And like, how are they able to get away with this? Because like anyone like I said, we first noticed them. We're talking going back even like 3 years, 4 years, where they're just liquidating. You see those 90% moves. Like anyone who's trading on a regular basis knows about them, yet nothing gets done.
Yeah, so it's remarkably kind of easy to spot these companies. I just open a filing and you see they have less than 10 employees. One, CUPR, I think, had less than $50,000 a year in revenue, and the revenue was declining, yet they had a $200 million market cap. So to anybody with even the basic level of sophistication can see right away that these valuations in companies don't make any sense. The thing is, and this is kind of a departure from what you saw 10 years ago in the China Hustle documentary, is they don't need to lie about their business at all, because the type of people investing in these China scams and liquidations aren't savvy enough to even look at the financials. They're paying no attention to it. If you look in the WhatsApp groups, how they're promoted, typically they'll just say, look, the stock is at 2 and it's going to go to 5. Trust us. It's the momentum. It's the Apple of China. It makes no sense. Or they'll spread false rumors of an upcoming M&A deal. And this is usually for the bigger ones like PTHL. In the months towards its run up, they said Gilead was going to acquire it for $75 a share on this date. So they kind of tricking you into thinking you have inside information when you don't. But it's enormously profitable for the scammers who I believe work with management. Often they'll get half the shares outstanding at a really low price, like 20 cents a share, and they can dump it at $2, $4, $8 a share. So it's kind of pure profit from them. What we've seen is NASDAQ almost has a financial disincentive to take these down because they earn money from the listing and they earn money from the volume. Regulators have been extremely ineffective at stopping this, even though the Trump administration this time has shown some indications they're working on it slowly. But what people don't understand, and what I'm laser focused on in my newsletter, is trying to figure out the recruitment mechanisms, what these scammers say at different points in the scam, because it's not as simple as, hey, buy this stock right before it collapses. There's a lot more sophistication to it now. And ultimately, I want to get really good at predicting these right before they liquidate. So I can go to my readers and say, hey, avoid this stock. It's about to fall 80% in the next week.
And in terms of like taking advantage of it on the short side, so have you been able to develop a system and a model for that as well? Because the other thing and the other caveat that I would sort of add is that these can be very dangerous both ways, in terms of you have to have, with a good degree of, well, it's never going to be certainty, but you have to have a likely good prediction that actually this could be the day that it's going to plummet. And if you're wrong, actually all the time it can be very liquid, can continue to climb, and then sometimes we can get some really scary examples where it might halt for several hours, opening after hours where it's incredibly liquid, and then start skipping $10 at a time or whatever.
Yeah, so far the track record with the bear cave on identifying these has been quite good. I've published on 3 of them with dedicated articles in my newsletter. PTHL, which collapsed 90% on the day I published. FlyE, which collapsed about 90% 2 days after I published, and Ray, which looks like it's collapsing now. And we'll see, but that one's taking a little longer. But so far the track record's really good, and I obviously want to get really good at identifying it. Now, there are a lot of risks. The biggest risk, and I don't think this is really understood by people on the outside looking in, is you don't want to trade one of these. At least in my view, you don't want to trade one of these where the float is completely controlled by the scammers and there's no retail investor participation. So RGC is one that just, went up crazy amounts. And you see a lot of these where they just completely control the float. And this, even if you had a 1% position, it would be a complete mess. You don't want to do that. So I really want to avoid the ones where they have complete control over the float, like an RGC. And I think another one is like ANNA. No, ANPA, I think. This is one where it's gone from 4 to 40 and can still go higher because if they control 99% of the float, they can just manipulate it on low volume to whatever valuation. So those are the type of ones you really, really need to avoid. And then how do you avoid them, especially when all the filings say that insiders control the whole company? The key is, you need to be in these WhatsApp groups or tracking these WhatsApp groups. These once they're promoted in these WhatsApp groups and they're telling retail, buy it at $2, buy it at $4, you know that they're selling to retail and the float is starting to become somewhat distributed. And once they sell a lot of their stock to retail individual investors, they can't pump the price up 10x because then retail would sell back to them and they'd be losing money. So the number one thing you need to do is avoid the situations where it's extremely tightly held. To me, that's by far and away. Number two, and this kind of goes hand in hand when you're doing something risky, is you got to size it appropriately. I saw somebody made a fake Reddit post saying they took 10% positions, short positions in each one of these, and they blew up when the stocks were manipulated after hours. And 10% is way too high. Like all shorts, the key is kind of position sizing. And now once you start studying them, you start to realize patterns, which is sometimes they're manipulated during the day. Oftentimes the biggest manipulation happens after hours. It's very common for these, especially right before they collapse, to have a 200% or more spike in after hours trading. And especially if you don't want to be at your monitor after hours, or you're afraid of that, I think the kind of workaround is to trade it more intraday. And these things pretty consistently, it's kind of become more distributed over time, tend to collapse in the afternoon. So I think the kind of key is you find ones that are being distributed through the WhatsApp groups where insiders don't control it. I think it's best to trade them intraday. And then it becomes, how can you time them properly? And that's going to be a long-winded answer that I'm happy to talk about. And that's what I'm really focused on in my newsletters.
Okay, so just before we come on to timing then, just to go back a step, in terms of like these WhatsApp groups, what's the process then? Because obviously it sounds like you've been able to, I want to say infiltrate.
Yeah.
You've been able to infiltrate. So what's that process like?
So I encourage, the best thing to do is live through experience. If you're going to trade these, just get in the WhatsApp groups. The way you do it is you go on Instagram, you go on Facebook. If you don't have those platforms, make an account and say you're really old, because the scammers prefer older people over younger people. And you'll quickly see on Instagram these ads for WhatsApp stock groups, especially if you're searching for stocks. You join a bunch and it'll always be the same thing once you click these ads to join. They'll say, do you have experience? Do you have a US brokerage account? Can you tell us one or two of your stocks? And how much money do you have? And they basically just want to make sure you have a brokerage account with some money, so you're someone they can scam. That's the kind of tier one qualification. Yeah. Then once you do that, they'll offer to add you to a WhatsApp group. Okay, but this is not the VIP group that matters. The first thing they add you to are these, kind of screening groups, which is, will you listen to what they say? And they'll usually say they have a fake professor or somebody impersonating a legitimate asset management firm. And they'll say, we have an AI model that can recommend stock picks. And they'll say, buy Rocket Lab or buy Apple at this price and sell tomorrow. And, you'll just do 5 or 10 trades, and they'll want you to send them your trade confirmations to confirm you're listening to them, that you're following their orders, when to buy and sell, and that you have money and are a person to be scammed. So there's this whole kind of qualification process that lasts a month. And something people don't realize is they actually invest a lot of money in this. They have fake branding. They have fake videos. I even brought a little prop for this podcast. One of these fake firms is called FNC AI. And they told me I was doing such a good job following their fake trades. They were going to send the members a gift, and they were going to send us a premium mug. And they said, check your mail. And I said, okay. And I checked my mail and it didn't arrive. And I'm like, this is just classic scammer stuff. I'm never going to get the mug. And then lo and behold, I literally got a mug from some fake asset management firm. The scammers are literally spending like $50 to FedEx people like nice mugs for their fake brands. They invest a lot of money to try to make it seem legitimate, unlike a normal scam. So money's leaving your account. You're just sending trade confirmations. And I talked to a lot of victims and I'm like, didn't you get a sign this was a scam? They're like, I was suspicious, but the fact the money was never leaving my account and, I never needed to send money to anyone made it seem legit. So if you do that a bunch over the course of a month, they'll invite you to either a VIP group chat or core group chat. And there's hundreds of these with tons of different brands and whatever. And I'm in a lot of them. And once you're in those, that's where kind of the scams will go down. And then they really just start promoting you these US listed Chinese companies. And typically, if you look at these scams, they kind of go up and to the right and collapse. So they might say, oh, buy this stock at 2 with 50% of your funds. And then you sell it at 250 to some other investor. So you made money at first, so you feel good. And then you do another one where you make a little 10% profit in a week. And then they say, with 100% of your funds, we got this great near-term, short-term trade. You really got to go in, and they're really going to be pressuring you to buy more and more. They're going to be asking you for daily confirmations of your holdings every day to make sure you don't sell. And those are the ones where you can kind of get a sense that it's closer to collapsing. So that's more or less what you're looking for. Oftentimes, before you're added into these VIP groups, which kind of contain their valuable intellectual property, they'll ask to do a FaceTime call with you, or they'll ask you to send a photo of yourself to make sure you're legitimate. So I've had a lot of FaceTime calls with the scammers. Sometimes they use AI filters. Sometimes it seems like they're in some sort of like forced labor situation. But it's really interesting, and a lot more. It's not like Wolf of Wall Street where you're getting a phone call saying buy this worthless stock. It's kind of a 3-month intro process, gaining their trust, and then you get all this good deal flow. And and that's another thing that kind of provides a complication is, in order to get their trust, you need to be sending them trade confirmation. So a lot of journalists stop at the point of needing to trade real money, or that kind of becomes a hindrance. A lot of people have gotten good at kind of faking trade confirmation. So I can convince the scammers I've lost $500,000 and I want to earn my money back. But that's broadly how the recruiting pipeline goes. Instagram meta ad, and they have a series of fake websites. You go in, you answer some basic questions, you earn their trust over the course of a month or two, doing trades on legitimate stocks, and then you're promoted the fake stocks. But even when you're promoted the fake stocks, it takes work to figure out exactly when they're going to collapse.
Yeah, and just before we move on to the timing then, in terms of you've gone through a really lengthy process here. They're going through a lengthy process in order to get people they can scam. But B, obviously, you've gone through it, and anyone else who's doing something similar, they've gone through a lengthy process as well to learn the process, join the groups, get invited into the VIP to find out actually when they potentially are, dumping to retailers. Now, I'm assuming as well that that's the process, and I think that's what I learned from just listening to you then is actually the level of detail that is required to go into in order to be successful at this, because it's like we're just about to touch on, timing it sounds crucial. And actually to get to that point, you have to have done quite a lot of work.
Yes. So should we talk about timing now?
Let's talk about timing.
Okay. So first, it's tough to predict the timing, even if you know all the tricks, even if you're in these groups. I talked to somebody who trades these professionally, who says he's earned tens of millions shorting these. And even he says, I can never pinpoint it to a day. The best I can do is a week. I'm trying to get really good at the timing aspect, but it is a little hard. Now, there are some things we can look for, which is there tends to be 3 types of US listed China stock promotions. There's ones that are promoted straight from the IPO, which is usually $4 a share, and it goes straight up. And usually those peak at 8 to 10 and collapse. Then there's ones that IPO at 4 and they languish for a bit. And then they're promoted really hard, and they typically get between $20 and $40 a share, like PTHL. Those are the biggest ones. And then those collapse. And then there's a third type, which I think is easiest to trade, called these secondary pump and dumps, which is after these things collapse, they often reuse the tickers 6 months later, in another pump and dump. And those are the kind of easiest to predict. So let's talk about the secondaries first, these secondary pump and dumps. And the general rule of thumb I found is there's these primary pump and dumps, and they're really easy to see on a stock chart. And then the secondary one. And the secondary ones never reach the peak of the primary one, and they typically don't even come close. So, I'm going to maybe pull up one stock chart here. So this STFS is one I wrote about. And you can see here it had this huge peak in January, right?
Yeah.
And then it kind of got pumped again to about $2, and I had trouble pumping it, and then it kind of collapsed. And here's another one, Fly E. It had this big pump and dump. Okay, and it collapsed from 31 to 5, And then more recently, it's pumped again from 2 to 7 and collapses. And so you remember the original pump the secondary pump never even comes close to the original pump. And there's a lot, like these. I think WCT was another one. It got pumped, and then there was the secondary pump. And the kind of general rule of thumb I found looking at these secondary pumps is they almost never approach more than 40% of the original pump price. They typically, it changes a little over time. These never really go more than halfway to the original price. And typically they kind of collapse when they get near 35% of the pump price. So one, ticker that's really relevant now is QMMM, because that one peaked at around $12 in November 2024 and then collapsed. And now it's about $4 today, and it's starting to flatline and it's collapsing. So on these secondary pumps, it's kind of simple. You can just look at the share price. Once it's at about 35%, it's going to collapse. And then typically at the very end stages of the pump and dumps, they love to just tell everybody to line up limit orders. So on the day or 2 days before collapse, you see it really start to flatline. It's either flat for the entire day or flat, and then in the last 15 minutes of the trading, they'll move it up. So on these secondary pump and dumps, if you see it kind of approaching 35% of an original peak, if you see it kind of flatlining and there's a lot of volume while it's completely flat, where they're telling you to buy through limit orders, and if you're seeing it being heavily promoted in the WhatsApp groups, those are all signs that it's going to be close to collapse. A QMMM is an example of that today. Now, on these really big pump and dumps, where you're seeing them go to, these are the ones that have the highest volume, that had languished for a few months and are being promoted. These ones typically have an element of, a false M&A rumor. It's very, very common for these scammers on these really big pump and dump operations to say, hey, we've got a US listed China company with now $200 to $600 million market capitalization. We're moving it up originally through wash trading, then through telling gullible retail to buy in. And what they'll say is, we expect our company to be acquired by a bigger US competitor like OLED, like Gilead Sciences, like whatever, on this date at this huge price. And those two pieces of information, the date the acquisition are going to go down and the price of the expected acquisition, are hugely important, because they can never really the day of the acquisition is kind of the end date for the pump and dump scam. Because if it goes on longer than that, they lose the trust of all the retail investors participating who are just going to sell. So pretty confidently that end date is the end date for the pump and dump. And what I found is it's typically a week before the M&A deals when they finish dumping all their stock. And that the ceiling for the price is what the M&A target price is going to be. Because if they're telling you, hey, the stock is currently 30, it's going to get acquired for 75. If it does get manipulated higher than 75, all the retail investors are going to start selling it, and it's going to be depressed down. So just by having those two coordinates, the date and the target price, you kind of you understand your risk framework with these, which is great.
And absolutely.
Yeah, so then it's more just, when is the target date? It's going to be usually about a week before. You look at the volume, you look to see when it's flatlining, they're really pushing limit orders and starting to promote it hard. Then you can kind of get a sense of it's going to get closer. It helps to be in the WhatsApp groups, but that's kind of, the best way to predict those, which are the biggest ones. And then the first type I mentioned, where it just manipulated straight out of the IPO gates, those are a little tougher to predict. I found that they usually get to about $8 to $10 a share before collapsing. I haven't gotten really good at predicting those yet. Again, it helps to be in the WhatsApp groups. But broadly speaking, those are kind of some of the things I'm looking for in the pre-collapse indicators. And one of the most obvious pre-collapse indicators is when they manipulate it after hours, up and down 200%. Almost always it collapses within a day or two of that too.
That's incredible. Thank you so much for sharing that. And I think that has to be the key from this conversation is, and I mean, to be fair, timing is what we do as traders anyway. Timing is important all of the time, but I think, like we've touched on, for this, is incredibly important. And if you can line up some of those factors together, like you touched on, if you are in the groups and you're seeing some of those other entry signals, perhaps, that's when all of a sudden you can start thinking about putting risk on. And I think like the only thing that like I always caveat is what I think like it requires that degree of expertise. Just because like, and then perhaps it's more the IPO ones that I've seen go, what I'm trying to think of some names that I've gone, like the one you touched on, RGC, is a good example. And I think like to be able to like have criteria for flat ones that are straight ignores also will help as well, because actually then that's a huge way of reducing your fat tail risk.
Yeah, because I think to a lot of investors, they just look at this and they say, oh, China names, some collapse, but some go up 100x. I just want to avoid it, avoid the headache. And to be honest, I don't blame you. There's a lot of ways to make money, maybe. But if you take a more thoughtful approach, I think it's really easy to avoid the ones that are manipulated up 100x. You can't manipulate up 100x if you don't control the float, and you don't control the float if you're offloading onto retail. So that simple nuance there saves you from the worst cases, and makes these things a lot more tradable. A lot of people also complain about the borrow costs, which is there's usually borrow. People I talk to are able to get a lot of borrow. It's just the costs can be measured in the hundreds of percents a year, which I think to some people on the outside say that's ludicrous. But if you can get good at timing these down to the week, which I think you can with a lot of effort, or reading my newsletter, or at least down to the month if you're following some of the WhatsApp groups, paying 10% to get a 90% collapse is very, very much worth it. So these things can work. And I think you can also just trade them intraday, short them at 10 a.m., cover at 3:45, and you lose 1% a day that you do that with some slippage or borrow costs, but you're going to have days in which you make 90% plus a lot of time.
Absolutely. Now, I suppose as well, so you must be, you're obviously profiting massively from this, but at the same time, you've launched a new website, and it seems like as well, like your end goal actually is to protect the investor. That obviously means that requires the exchanges to actually do something. But so you must be quite torn in the making money, but also want to do the right thing morally and socially as well.
So something I will say with my newsletter is, and this comes as a surprise to a lot of people, is I don't short the stocks myself. I only make money from reader subscriptions to my newsletter. I don't short. I don't partner with a hedge fund for a profit sharing agreement. I don't do consulting with. I only make money from reader subscriptions to my newsletter. So I hope readers sign up and then they can profitably trade these, and it helps with their own research process. But I'm not doing them myself. And I think the long-term goal is we're probably going to see at least 20 of these for the remainder of the year. This is a perfect time to be doing this podcast, because typically these pump and dumps happen more in the second half of the year, July to December, than in the first half of the year, partly because there's so many Chinese holidays in the first half of the year. So we're going to see a lot of these. And if you can make 1% on each collapse, there's going to be at least 20 of them. There's going to be a lot of opportunities here. But long-term, what I would love for the newsletter is to get a reputation for spotting these the day or week before a collapse, eventually getting mainstream media, attention on it. And then, exerting some pressure on NASDAQ or the SEC to say, what are we doing? Because this does hurt individuals the most. And I see it with my newsletter and website dedicated to stopping this, is tons of people reach out to me saying they've lost 20, 30, 40K. And these are like the working class people of the world. And it's just sad to see, and it's so meaningless.
Yeah, I think that's what would sadden me the most. Like if, you picture your grandma or someone is vulnerable. Personally, I'm not sure how my grandma would get into one of these groups, but just say she did. And if she was to lose a lot of money, a pension, whatever it may be, I just find that incredibly sad. And on a personal level, I appreciate there are a lot of bad actors in the world. And it's, up to us to do a lot of due diligence to be able to recognize those. But at the same time, it just seems sensible for us actually to protect, that's ultimately the SEC's job, is to protect, American investors, and not just American, but global as well. And I think, and I hope, and I really hope your campaign, and I hope it works, and that it does draw more attention to this, because you can imagine if it suddenly starts appearing on CNBC, or all of a sudden it will garner a lot of attention, and actually there'll be no choice but for for someone to actually act and do something very positive.
The scammers were definitely aided by regulatory inaction and from doing this all in China. So like, you're kind of untouchable, or,
Yeah,
Southeast
yeah,
Asia. They're also aided a lot by, I think there's a loneliness epidemic in the country, and especially among
yeah,
older people. Yeah, a lot of people just want connection. And so that makes it easy. A lot of these scammers pretend to be younger women who will flirt with you. I've literally had FaceTime calls with the women, and it's just like these AI filters. And I can tell it's a fake AI person, but a lot of people probably couldn't. And they'll send you voicemail, say, please buy the stock, I trust you, we're friends. So there's loneliness. AI helps them, and then these huge technology platforms that allow them to recruit in huge numbers also aid in them. And one criticism I've been getting a lot online from people, and I don't love this criticism, is you're not actually helping anybody by writing about this, because they'll find your website after they've been scammed, not before they're scammed, which is frankly largely true. Most of the people who reach out to me after a stock collapses find my article and they say, I wish I found your article sooner,
but
and it collapsed. But what it does help do is it helps prevent people from getting re-scammed. Because what almost always happens with these scammers is you buy it, you lose your money, and they say, look, our stock was attacked by short sellers. That's why it fell 90% in a day. Someone leaked it to them.
yeah,
And we have another stock to help you make your money back. And amazingly, so many people just buy the second stock hoping to get it back. So by highlighting this and how it works, you can prevent the people from scamming. I'm not kidding you. I had a woman email me who said, look, I lost 50K buying this one stock, but now they promised me CUPR, Caprino Holdings, which had 50K in revenue, $200 million market cap, is gonna go back up. Like, should I invest in it? Is it a scam? And I just say, how can you make it this far in life?
yeah. It does make you wonder, and I think you're doing incredible work, and I think, and some of people in similarly to you as well, like some Hindenburg, etc. Like, I think you all do like fantastic work, because ultimately, there's no harm, and there should never be anything negative associated with just revealing the truth. And that's at the core of it. That is exactly what you're doing. You are highlighting genuine scams, that if someone is buying them, and if they could losing 50K, like I could feel for that woman straight away, because I'm like, that was probably a significant part of her net worth, because that's the type of person that they're going to prey on.
Yeah. And, it's because they convince you you're making money, and you are often making money, because if it's going up and to the right, you've made money off their picks that they've given you randomly, but some of those are going to be really profitable. I talked to somebody who was in Qatar who lost his entire life savings, $270,000 on PTHL before it collapsed. And I said, well, didn't you think it might be a scam? And he said, I was suspicious, but I'm never sending money outside my account. And the way we're conditioned to think is don't give the money to strangers, but if it's in your account in NASDAQ stocks, you think it's safe. And then he said, I was worried, but it kept going up. At one point, he had over $130,000 in paper gains that he could have sold, and he didn't. And, so it's very much like, I think these things are way more sophisticated than people realize. They're so good at keeping you in the date. They're so good at having excuses why you can't sell. They're so good at pressuring you to have more. So on the onboarding, they love for you to send a screenshot of your account so you can, quote, give them so they can give you good advice. And they give you like a ticker by ticker analysis of your entire portfolio. And what they'll do is they say, you need to sell half of these. They're bad. These are the reasons why. And they'll actually, they must be using ChatGPT to do these reports. But they do that so you'll have more cash freed up so you can be scammed. There's whole elements to this.
That's like the worrying thing, actually, is like the levels that they go to, but obviously the levels that they're able to go to as well. Like this is, like you said, it could be a month, 3 or 4 month process, but ultimately, like you touched on, if they make it 10 billion as scammers in general from carrying out this scheme, that's a frightening amount of money, and from their point of view, absolutely worth their endeavors.
Yeah, and the $10 billion figure is my estimate, but CLEU collapsed earlier this year, and for the first time ever, I think the Department of Justice was able to seize half of the funds. So the scammers stole $400 million in their bank accounts, and they were able to recover $200 million. So they earned $400 million from this one pump and dump, which was large. And, there's like multiple of these every week. So, if you had 100 a year at 400 million per, that's 40 billion a year. I think a lot of them are kind of smaller than CLU, so I apply a discount, but it is actually like a huge number. I mean, we're talking,
just billions, absolute billions.
Okay, so Sam, we talked about this. I'm building, kind of a crowdsourced website, which is good for everybody, including, traders, to look at to understand how these scams work. So I have this website, stopnasdaqchinafraud.com, which is basically a crowdsourced database of all these WhatsApp scam group chats. So you can see close to real time what the scammers are promoting, how they're promoting it, what are these groups. So if you want to join these groups or understand how they work, you can come and you can see over 500 screenshots of how they work. You can see who the admins are. You can see how they promote stocks and how they convince you to send your statements. And most importantly, you can see what tickers they're promoting and search by ticker. So one company I wrote on that has collapsed is FlyE. And here you can see all the messages. So you can see that they were promoting FlyE and CUPR at the same time. And they said, here's the limit orders you should use. Typically, if they're telling you to use limit orders, you're kind of towards the end of the pump and dump scheme, because they use limit orders so they can offload stock in an orderly fashion without it seeming like it's taking the price. I'm trying to find another thing that surprised me about these is a lot of the people who upload it's in international languages. So you can know that the victims aren't only US, it's overwhelming around the world. And then I'm trying to find one good, screenshot to show you.
And just on this, how I think people uploading these in real time is this a good indicator that suddenly lots of people are uploading something about FLYE? That again, that's a good chance that we are at that point of the pump.
Yeah, so like here's an example of a post that was uploaded August 13th. Okay, FLYE. It's the potential for 80 to 120% gains within the next 120 trading days. Okay. So when I see that, I think it's not going to go up more than 80%, because then people are going to start dumping it, and it's going to collapse in the next 20 trading days, because if it goes longer than that, these people are just going to sell it. Right. So if you look, this was a post uploaded August 13th, and I just want to look at FlyE stock. It collapsed literally like 4 days after that, and it didn't reach anywhere near the target price. So once you see them start giving you dates and, these big numbers, that's when it's going to collapse the next 20 days. Versus if they say, oh, just hold it for 3 days, 10% gain, then it's still just kind of being in the pump up stage. But once you see language like that, you tend to know it's closer. So yeah, I upload a lot of screenshots to this database, but I also monitor it to see which new stocks are being mentioned. Like I hadn't seen this one before, MGNC. So now it's on my watch list. And then you see they also promote legitimate stocks to try to give it the allure. Like SMCI is obviously not being manipulated. They're just trying to make it seem like there's some legitimate ones in the negative. Like YMAT was one that was promoted today. I think that kind of was promoted yesterday. I think that collapsed today. But it's a good way to build out your watch list, and you can see based on the language they're using, kind of get a spidey sense for how close we are to collapse.
Yeah, no, that's incredible, and the level of detail there is phenomenal. So, I mean, obviously, congratulations on such a great website, and that comes again from your expertise of following these for months on months. And I think, like I always, whenever I have a guest on, I'm always in awe of their commitment and their passion about their craft, and whatever that specialty may be. It just always blows me away, the level of detail that they're able to go into. And of course, you're absolutely no different, and I'm sure all our viewers can absolutely tell that extremely easily. So I mean, congratulations to you, of course, because that's phenomenal and truly genuinely inspiring.
No, thank you, Sam. I really appreciate it. And I do think there's a societal good in shining a light on these and exposing these.
Absolutely.
And there's absolutely trading opportunities to take really small positions, try to time them right in these WhatsApp promoted stocks. And, there's going to be 20 plus of these 90% collapses in the next few months. So this is a good time to get into it.
Yeah. And I think as well on that as well, like it doesn't look like they're going anywhere either. And we're talking obviously like it's going to be a busy end of the year, but there's a good chance as well that we're going to continue to see these well into 2026 and for years. And obviously I hope that there is some awareness and light is shine more brightly on them. But for now, it seems very much like we are going to have a strong continuation of this theme.
Yeah. That's what I think. The earliest I think we're going to see a real regulatory crackdown is 2026. There's definitely going to be a lot of these the remainder of the year.
Yeah, well, thank you so much. I mean, there was loads more that I did want to go through, but I appreciate your time so much. And like, this has just been the most in-depth discussion I've ever seen on these. I think we've ticked that. I don't think is there anything you'd like to add about these the liquidation trades? I think we ticked everything off.
No, if you want, we can talk about other things in the bear cave. But on liquidation trades, I think we covered good ground. The other thing I would say is there's stopnowsdocChinaFraud.com as a good resource. There's a bear cave as a good resource, and there's a Reddit group called Vampire Stocks. That's an excellent resource for trying to track these and understand those. If you read the bear cave, you go to Stop Nasdaq China Fraud, and you read Vampire Stocks on Reddit, you will be in the top 1% at understanding how these work.
And that's that's where I think that's the spot to be in. If you, like you said, you can make significant money in recognizing the timing of this. It'd be great. It'd be great to discuss some of the other stuff that you do.
Yeah,
perhaps a more traditional. I say more traditional, but that may not be. That's probably not the right word. But I'm just really interested in now we're talking about obviously like US stocks, like RBLX, Roblox is something you've highlighted recently. I think we all have like a degree of skepticism, but what does it like truly take to expose and to dig deep into these bad companies? Because on the surface, like I actually bought a Roblox gift for a friend's son last week, which you can if you want to hate me for that, but on the surface it seems like a great company.
So there's these China liquidations, which have, we're moving on from, which has been a kind of more recent focus over the last 3 months. And, I'm really trying to become best in the world at. But then there's the more traditional, bear cave, which is I really try to focus on $1 to $10 billion public companies that are misleading investors, harming customers, or on the wrong end of disruption. Historically, I've done a lot with consumer protection. Now, under the Trump administration, I think that's a little bit less relevant and actionable. So I try to focus more on disruption themes. And, one company that I've criticized a lot in the bear cave is Roblox, largely around the child safety issues. It's a game for young kids. And unfortunately, it's also a leading platform for predators to meet young kids. And I don't think they've got a good job figuring out those safety issues. I do think it's a real risk in the long term. I think a lot of it stems from the fact that the platform is catering to really young kids. There's an open chat functionality, and there's no way to really ban bad actors. You don't even need a phone number or email address to sign up because the kids are so young, which means you can just easily recreate accounts when you're banned. So there's a lot of like Roblox specific things that make it into like has a lot of safety problems. That said, I have mixed feelings about how great it can be as a short. I talked to former executives from Roblox who tell me that they're shorting Roblox themselves because they think it's overvalued and a little bit of a fad. So that gives me credence to the short idea. And then I also see, though, children, especially young kids, really love it. One of the things that's part of my research process that's kind of unique to me in the bear cave that I'd say I'm uniquely very good at is I can use the Freedom of Information Act, FOIA, to get consumer complaints filed with state regulators against businesses. So I'll go to the Texas Attorney General or the FTC and see what complaints parents are filing against Roblox, for example. And there's a ton, some around safety issues, but the biggest complaint by far for Roblox is parents will write the state AGs or write the FTC to say that their kid is locked out of their account and that they've spent $500 over the last 2 years on Robux and they can't get back in because there's no recovery email or password. So they're begging the FTC, like, please get my kid his account back. And you could maybe, some people like view it as a negative, saying, oh, look, like they have bad internal controls, whatever. But I kind of view it almost as like a positive. Like these kids view the game as part of their identity. They love this game so much. You know, you lose your Minecraft world. Your parents aren't writing the state AG to get your like thing recovered. You get like logged out of Fortnite. You're not, but for Roblox uniquely, it's a part of the kid's identity. So that's one I kind of struggle with as how actionable it is. I have this journalistic side of me that wants to highlight the safety issues. And then there's the part of me that sees, people just love this game and it's a model that, should be very profitable at some point in time. So Roblox, I kind of put in terms of an actionable trade, maybe a little bit in the too hard pile or lean short. But then there's a lot of things that I do think are exciting shorts. Signet would probably be my top short idea now. And I've written a lot about that. I've written about KinderCare. I've written historically about companies that I think are going to be disrupted by AI, like Chegg or call centers. So those are kind of the things that are more top of mind, but I think actionable for short sellers.
And in terms of like recognizing these companies, obviously so many are listed now. Does someone come to you? Do you recognize that there's perhaps an issue? Do you receive the complaints? What's the start of that process? Because, I mean, it just seems like such a minefield. There's so many companies out there. And most aren't great, if we're honest.
It's multifaceted. So I do try to be an independent and unique thinker as much as possible. So the people like to say short Carvana, short Tesla, short Supermicro. And I try to just ignore all those. So, I want to focus on more unique, off the beaten path ideas. I like to say, so I'm on Twitter a lot, and a lot of times I'll see a tweet that just seems interesting and, start looking into that. I tend to track a lot of board members. So if a company collapses, like a SPAC does really poorly, I will look at all the board members and see what other boards they serve on. I read SEC comment letters, and I have software that helps me highlight high-risk SEC comment letters. I have another website I use to track all paid stock promotion campaigns. And if there's a large company running paid stock promotion campaigns, that gets on my radar. So there's a lot of things. The biggest is just reflecting on my own consumer experiences and the experiences of my friends and people I know to try to spot trends, which is how I kind of got to this lab-grown diamonds potentially hurting Signet. So that's kind of the idea generation phase. And readers sometimes reach out to me too. But that's all over the place. And what kind of makes me a little different is I'm really good at getting the consumer complaints people file against companies and focusing a lot on a company's relationship with its customer base. Because oftentimes there's allegations, but how severe is it? People don't necessarily trust online reviews. But when you can go direct to the source and get hundreds of consumer complaints people are filing, then it can lead you to have, I think, a more insightful view of the world than Wall Street.
Yeah, absolutely. And just to signify as well how well respected, you are, and particularly with us at Investors Underground, we have alerts when we have obviously we have our own AI software, etc. So we'll have alerts when your newsletter comes out, or when obviously you've written a short report or some description. We're like, hang on, we know instantly. So that's how much you are respected in our lens. And I think, like, on a personal level, like, I just think you are. I think it's a tough job, because I'm sure you get tons of hate and you get accused of all this. But like what you're doing, I think, is absolutely shining a light in the correct spot. So massively thank you. Thank you from me. And you're definitely fighting the good fight. That's for sure.
Yeah, absolutely. Thank you so much. And I'll need to pay more attention to Investors Underground going
Absolutely,
forward.
absolutely. Well, we'd love to have you jump in, and you're absolutely most welcome. We'd love to hear any more of your ideas. Absolutely. And just before we wrap it up, just some final thoughts, and perhaps as well, like some, just some inspiration and some words to anyone looking to perhaps, emulate some of your success and go down that activist route.
I think building distribution is kind of key. You can do that wonderfully online through Twitter or starting a newsletter. So finding ways you can get distribution, start putting ideas out there is key. I think going a little more off the beaten path, if I reflect on my career, it's very off the beaten path to not take a job right out of college. The way I look at things is very off the beaten path. So it's okay to go off the beaten path. And maybe one final thing I would say is a little bit of initiative goes a long way. So many people are afraid to reach out to someone or cold email or cold call or cold DM. Once you get comfortable doing that and taking just a little bit of initiative in life, I think things compound beautifully.
That's incredible advice. And then lastly, where can everyone find you? And just to go through some of those links again, because they're incredible.
Absolutely. The best thing is just Google the Bear Cave newsletter and it'll be the first result. So the Bear Cave newsletter is my main outlet. StopNASDAQChinaFraud.com is the website where you can check out the WhatsApp groups. And then I'm also on Twitter @StockJabber.
Thank you so much. I've loved this conversation, and I just thank you so much for your time. I'm sure our viewers are going to absolutely love it. And I just, highly encourage everyone to, do that due diligence and to check out those links as well, particularly if you do want to trade, some of these Chinese liquidation names, because you've done the work. The work's done for you, and it's a case of actually, being very much aware of that. And like we said, I think the core lesson is work on that timing, get that timing right, and that's when you'll be incredibly successful.
Absolutely. Thank you so much for having me on.
Edwin, thank you so much. Like I said, I absolutely love this. Have a great rest of your day, and thank you so much for joining me. And everyone else, thank you for joining us. We hope you've enjoyed this session. Please hit that like button, hit that subscribe button. Go check out the Bear Cave and check out Edwin's links. Thank you all very much. Peace, everyone. Thank you. Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.